Good morning, everybody. Today is the 26th day in the month of January 2022. My name is Heritage Adisa, market analyst at HotForex. And quickly, as usual, we'll check through the markets, see what the overall sentiment is, what are the big stories driving markets, and then if the opportunities, and then how we can take advantage of these opportunities. But please remember that this is just a communication material, and nothing in this communication should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users will be responsible and liable. What we have this morning in terms of the overall mood in the market, the overall sentiment, dominant sentiment in the market, is for me a more mixed environment generally. Right? You look across board and you see equities, markets generally trading lackluster from the equity space, even to FX, right? Even to some of the commodities, right? I had this written down earlier. I said markets trade lackluster and in small ranges ahead of key FOMC meeting, right? Most equities trade flat, still within yesterday's ranges amid a mixed environment. Yes, we could see some of them jump up to open the day, the start of the day, but even with all of that, it's still mostly within a range, kept flat most of the day, and it could continue like that until we get the key catalyst, starting with the FOMC meeting. And then even the BOC just before the FOMC meeting could also give us some spark for markets, right? Generally, worries over Ukraine tension between Russia and Ukraine, with the US involved, NATO, all of that, still very much dominant in markets. Obviously, markets are still paying attention, to all of that, and then it's still one of the reasons why we're seeing equities not really recover from some of the downside it had in recent time, apart from the Fed, right? And I also had here written, I said we should also see, or should continue to see this lackluster price action continue through Europe, right? And hopefully from the Fed, we could get something that markets can really, really work with. On the equity side, mostly flat, although up from the open. US 500 is only up about 0.99%, around 43.4350. Oil is also capped, right? Yes, it's grinded higher a little bit on the day, but not by so much. Obviously, next catalyst is a key one to watch out for. Starting with whatever goes on or whatever happens with Ukraine, Russia, that could also affect oil prices as well, as Russia is one of the major, producers of oil. So there's that to watch out for. For the VIX is still very much, something to worry about. Obviously, still there, but it's still well above 20, 20 level. But I remember saying, okay, when we get to the chart, I'll show us that. On the currency side, still mixed really. We have CAD leading the majors. We had NZD leading the majors to the downside, right? But now CHF has taken over, so more or less it's still all over the place, right? JPY2 a little bit mixed on the day, AUD a little bit mixed, right? The biggest mover so far, as when I wrote this, was NZDCAD, just down about 0.19%. That more or less just shows you, the kind of range that we have, really small KG price action. In the day ahead, we're expecting BOC first, then the Federal Reserve, monetary policy meeting as well, release statement, as well as New Zealand CPI, also expected to come in hot. Now, starting with the equity space. Quickly, what's going on? All right. And just load up so I can show us, a few things that I want to talk about. Now, like I was talking about with equities, right? This is the US 500, right? And I like to use it as a gauge for sentiment because it usually shows us a good picture of what the equity market is doing generally, also known as the S&P 500, right? Yes, at the start of the day, we had that jump up to the upside, a little gap and slight jump to the upside, trying to recover some of those losses from late yesterday. But you can see in risk over the last couple of minutes and hours, it's really, really just remained in a range today, right? Nothing much going on just yet. And if you look around, yes, we could see we are way above, the lows that we created this was late Monday, right? The lows were created late Monday. Yes, we could look at it like that, but even with all of that, we are still within yesterday's ranges and nothing to work with just here. And if you look at something like the same US 500, right? We could talk about key levels around it, resistance support, downside. But overall, I mean, the entire big picture, looking at coming from the lows of the pandemic, is still just a tiny ounce, right? If you look at from the lows of the pandemic, going back to March thereabout of 2020, what we are seeing right now compared to this move is still a little bit. So it doesn't really still say We can't still call this a full correction yet. I mean, yes, pullbacks, regular back and forth, but it's because we're looking at it from a shorter term perspective that looks like a massive bleeding market. No doubt is there, but obviously the resilience in buyers still, remains in place. And as long as, once we have some form of ease, right, with Russia, with Ukraine, that helps equities. If the Federal Reserve also more or less in any way slows down or disappoints market in terms of expectations for faster rate hikes, right? That would also provide ease for equity. So yes, we could look at it. Obviously, right now pressure is evident, but I'm not giving up on equities just yet. I said that deep buyers would still try to defend the level. Now we're defending, this key round number around 4,300, right? Right, so there's that to watch out for on this particular one, but we're still keeping it clean for today's session. Nothing much going on just yet, still within yesterday's ranges, and then we'd like to see how this plays on from here. Across the equity space generally, I think it's the same story across board, right? Nothing much going on just yet, right? And it could continue like this until we get the FOMC meeting first, right? That should provide us catalyst. Now, looking over to the FX, like I was talking about as well, still really lackluster movement across board. For JPY crosses that we talked about yesterday, they all are still trading within or just above that support level we talked about, right? Support level still holding around that region as well. You look at USD JPY, right, just above the level as well, kept above it. CAD JPY, struggling around that level as well, all around key levels. And for now, I'm still keeping it a little bit numb, for the time being. If I'm going to look at currency pairs from the BOC, now, yes, the BOC are expected to come out with a rate decision later today, right? And then from the decision, we're expecting not any changes, from the interest rate point of view. But I'd like to hear from what they say in the comments or in the rate statement, as well as even the press conference later in the day. Now, what's interesting about this is markets have been pricing a lot of hawkish expectations for the Bank of Canada. Markets expect about 6 interest rate hikes, right, going into the year 2022, right? Apart from that, yes, we could talk about job numbers being good. We talk about, data generally being good for Canada, but most of this data was pre-lockdowns as well as pre-Omicron, restrictions that came in late December, as well as early January, right? Now, all of this have not been factored into the latest data that we've had. Right. In as much as yes, we could talk about them being hawkish, but I think markets are expecting way too much. And if we get any form of disappointment that doesn't play into 6 rate hikes, yes, market is going to hike at least from this meeting. If we get that rate hike, that obviously should be good for the CAD. But if they don't give us anything that looks like they would hike more and faster, like over 6 times or around 6 times going into the year, that could be seen as a negative for the CAD as well. So in as much as yes, expectations are going to the meeting solid, strong. We still need to be very watchful about what they say and read between the lines there. Now, if they come out more negative, right? Obviously, in terms of not hiking at all, that's number one. And if even they hike and they don't give us a clear path towards faster hikes before the year runs out, that could point to negative for the CAD. Now, how I like to look at this. First of all, from the Monday show, we talked about the CAD against the USD. But before we do that, let me talk about CAD against JPY. Obviously, risk sentiment is one to pay attention to, and obviously one to be very watchful about. Until we see, risk on, or we see more positive environment or equities give us a little bit of, leeway, right? I wouldn't want to jump into just a risk asset like this clearly and purely just yet. But looking at this particular one, there's a clear level around here that I'm going to be watchful about. This is around 90.5 level. Obviously, in today's session, based on strength and weaknesses, we're seeing, the CAD poke, that level already, right? But I'd like to see the POC give us something to work out for. If they come out more negative, obviously, I expect downside with this, right? Sentiment is already weak already. Although we need to pay attention to oil prices, oil prices have kept more resilient over time, so that could help the CAD in a bit, but it's one to watch out for. But if they come out more positive, if it's negative, I'll like this particular pair to the downside. But if they come out more positive, what I would like to pay attention to would be let's just open up CAD pair generally, and then look at what I like to see. All right. Just quickly, because these are things that I have on my radar for today until we get a particular meeting, and I don't expect too much, right? But obviously, I want to pay attention and be watchful about what we get. Now, for CAD, if we get a more, hawkish, more hawkish BOC. This should load up. All right, this should load up quickly, really fast. All right, I think we're back now. All right, now if we get a more, okay, it's not loaded up yet. Okay, now good. Now, like I said, oil prices have kept really, try to keep resilient compared to the downside that we've seen in the likes of equities. I mean, it's been very resilient, right? And then obviously with the tensions with Russia, this has still helped oil prices also keep the strength. Now, if we get a more negative, a more positive, rather, a more super hawkish Bank of Canada where they hike and then they give us energy, or they tell us or give us comments or say stuff like we could still get more hikes, as much as 5 to 6 in the year, or they could hike some more, right? That obviously would be good for the likes of CAD, and I would like to see something like EuroCAD on my radar. Now, already EuroCAD is already heading lower, right, over this week, really pushing lower already, and then we're heading into support level around this round number. Let me just mark this out for us. Okay, key level around here, right? Around this low going back to the 7th of December, as well as the low going back to, I think, 21st of January and today's session already. Now, what I'd like to see would be a clearing out of this level really to the downside. That would have been preferable, because you're seeing a lot of resistance around here. So I don't want to be selling into resistance. Or alternatively, if you can get a retest of this and then push lower, I'd like to see downside for euro against the CAD if we have a more, hawkish Bank of Canada. For the Federal Reserve, now, the Federal Reserve are more like in a, I wouldn't call it a tight spot, but we're talking about global economic recovery starting to slow a bit, and then based on Omicron, based on slight restrictions here and there, but inflation is also on the high. I mean, 7% for the year. So all of that we expect the Federal Reserve to come out more hawkish, but I think from the statement, it should give us something very clear in terms of no changes, first of all, from the rates. Yes, they could wrap up asset purchases, follow through to March ending where it should end, right? But we're expecting, we would like to hear from what they have to say. They come out saying, giving markets more expectation, give markets more reason to price in even more and more rate hikes. Market already expect 4. The Federal Reserve already said 3. So if they say more than 3, or give us anything that shows signs that we could get more rate hikes before year runs out, that obviously will be super good for the dollar and bad for equities. So there is that to watch out for. I like to just wait out and see how they come out. First of all, USD JPY would always be a favorite if they come out in more hawkish overall. And then we've looked at this pair over and over. It's been lower based on the risk off that we've had. In risk off environment, USD falls against JPY, but we've held on to this key 113.5 level. So if we have a more hawkish bank, I'd like to see a clearing out of this level. You can see previous support, resistance, key level around here that we've been struggling with over the last week, right? That's over this week, really, from Monday, right? If we have a more hawkish Fed, obviously I like to see us clear out this level to the upside, and then we could see how we could play this out for the upside. But that would be bad for equities, and then see equities lose more juice. And if that happens, obviously you want to look at selling something like AUD USD, look at selling something like NZD USD on that particular front. Although if they come out a little bit more cautious, yes, acknowledging inflation, but still say something like inflation is still, just hot, it would come back down, going forward. Obviously, that would disappoint markets, and then we could see USD fall some more, most especially against currencies like AUD, right? Considering clearly considering, sentiment at the time, but that's one to pay attention to. But like I'm saying, all of this will still boil down to what both central banks say in the meeting. And until we get that, it's likely we see, or we continue to see, such price action really just range, right? Muted price action before we get those meetings. So for now, I'll sit on my hands, wait out for the meetings, see what comes out, what they say, how they say it, and then what markets think of what they have said, and from there take action. If at that point I can't still see anything tangible to work with, I would still leave it alone and then come back and see how sentiment plays out going forward in days ahead. So like I said on the calendar, it's just those 2 events that we have, right? The Federal Reserve as well as the Bank of Canada. We also have New Zealand inflation data for Q4 of last year. Obviously expected to come in hotter than previous, and RBNZ have been a very hawkish central bank. They've hiked about 2 times already, looking to hike even more. So obviously more or higher interest rate, like higher inflation like this, points out to further and further expectations for more interest rate hikes, right? So we'd like to pay attention to that as well. But sentiment right now is still king, and I expect that to still hold on to for the rest of the day. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always do our best to help. Thank you. Do enjoy the rest of the trading session. Bye for now.